Welcome to ForexTV.com. Today's Wednesday, August 19th. I'm Tim Kelly with your New York Forex Market Buzz. U.S. equities shook off an Asian-led sell-off overnight. Higher crude oil futures are helping investors push equities and risk assets higher as gold futures are also rising. The dollar and the yen are also giving back recent advances while U.S. Treasury prices continue to rise and the yield on the U.S. 10-year note falls 2 basis points to 3.49%. Had been down a lot more earlier in the session. Well, crude oil rose after a government report showed that U.S. inventories declined the most in more than a year as imports tumbled and refineries increased operating rates. Stockpiles dropped 8.4 million barrels last week, the most since the week ended May 23, 2008. That according to the Energy Department report. Imports slipped 15% to 8.53 million barrels a day. That's the biggest drop and lowest rate since September when hurricanes struck the Gulf of Mexico coast. Well, today we're joined by Brian Dolan, Chief Currency Strategist at Forex.com. Brian, welcome.
Good afternoon, Tim. Thanks for having me.
Always a pleasure, Brian. Once again, I find myself for 3 straight days this week scratching my head, wondering why the markets are behaving the way they are. We saw the Shanghai Composite sold off pretty heavily after a couple of days of similar behavior. Futures were down this morning, and thought we might have another day of losses in the U.S. equity markets. That turned around. Oil inventories came in lower than expected. Oil back up to recent highs, and risk is back on, day off, day on. I got to tell you, it's a tough one for me. I look at the technicals. I'm a little confused right now. Maybe you can help us out, Brian.
Tim, I appreciate your situation. You're not alone, I can assure you. Today's been confounding for just about everybody involved, I think, and that's largely played out in the price reversals that we've seen. I think basically we were looking at a pretty everything was pretty much playing along with expectations until we got the floor trading open. And ultimately, what happened there was the floor stocks did not open down as much as futures had been suggesting, and then it looks to be just a very ugly risk short risk short covering since then. And so we've had the major reversals in basically the dollar coming off sharply, and yen cross is rebounding as stocks then eventually turn positive. I suppose one of the potential drivers for the dollar today was a dollar negative editorial from Warren Buffett that appeared in the New York Times.
Right.
That would have been out. That was out earlier overnight. It didn't seem to have much of an impact on the dollar, and I'm reluctant to ascribe too much significance to it. But I would sooner go with that. We're still in a summer range trading market, and it was short-term positioning and the computer models again, the algorithmic traders basically riding the roost.
Yeah, no doubt. Speaking about that Buffett article, we've got some of the big investment banking firm research departments saying that Goldman Sachs, for example. I know you guys don't mention banks and specific companies. I will. Goldman Sachs said to their clients that the recession is probably over. I don't know if you've seen that today, but. So you would think that is the opposite position as Buffett. So you've got two pretty influential voices in the market with different and opposing views of what's happening here. Brian, you mentioned range trading here for the average trader out there. I know you breathe and eat and sleep Forex, which is good for us. What's your advice at this point? I'm not going to ask you to name levels here. That'd be crazy. And I don't expect that in this kind of market. But what's the advice for traders out there trying to trade this market day to day?
Right. I would say until we get a sustained break of the summer's ranges, and I will go into levels in a minute. Basically, you have to fade the moves and anticipate that the ranges hold. And until we get a daily, significant daily closing break of these ranges. You have to play it from a short-term move and not anticipate a sustained directional movement. It seems right now that the average length of a move is about 18 hours. So that's at least that's for this week. So the range levels that I'm paying attention to are on the euro, basically 145 to the low is around 137 to 138, and then 140 is going to function as a pivot in there. While we're above it, we can continue to probe into the upper end of the range, and if we drop below it, we'll be setting up for a test of the downside. The pound has roughly 160 to 170 as the ranges to look at, and then and we look to have already just put in a bottom down in the sort of the middle of the range, middle third of the range, down around 162.5, and that looks to be and now we're back up to trading at 165.5. So we're kind of stuck in the middle there. Dollar yen, ultimately, I think that's kind of in a 92 to 95 for the time being. My longer term, I've got a more bullish recommendation on dollar yen, and I'd like to buy that on weakness sub 90, basically 93, using 93.5, 92.5, and 91.5 to scale into a strategic long. That said, Tim, going back to the whole bigger theme of China selling off and risk reduction seemingly taking place, I do think that we're probably summer is coming to an end. We are going to get into a more normal kind of market, and I have to think that when it comes to positioning for the end of the year and what are asset managers going to be looking at, I think they're going to be more inclined to pare back on the risk positioning rather than add to it. After the major run-ups we've had, it doesn't seem that they're going to double down on the risk higher bets. And so I think the prospect then is for an ultimate break to the dollar's upside as risk aversion or risk appetites fall back, and then also looking for a lower yen cross across the board. So that is my preference looking ahead, but right now I'm not anticipating a break until we get sometime into September.
Right. So Brian, let's talk a little bit about fundamentals in an environment like this. How let's take, for example, we've got two events tomorrow. One is Bernanke speaking. I'm not sure he's going to introduce anything new there, but we also have initial jobless claims. If we get a big movement, non-farm payrolls 2 weeks ago, we got a big surprise. That market didn't do what it was expected to do at that point, and that started the real confusion for me a couple of weeks ago. But tomorrow, if we get a big surprise here, is that a big enough event to move these markets out of the ranges, you suppose?
It could be. I wouldn't necessarily bet on it. You'd have to see, I think, a jobless claims print under 400,000 to really strengthen the bullish argument. And otherwise, it looks at sort of forecasts for basically to hold around the 4-week moving average of around 550, 570 or so. And that's one of the underlying causes for my pessimism here is that the employment situation does still remain weak. Consumer spending is still contracting, and that's another reason that I think the fundamental picture argues for a bit of more of a relapse in the risk trades. And tomorrow, we have to be prepared for another roller coaster like this. If we get an as expected or let's say worse than expected initial claims number, followed then by a better the other piece of data coming out, Philadelphia Fed and the leading indicator.
Right,
so if we get better reports than those, we could be in for another crazy reversal. So every data report right now has a bit of an outsized effect on the market, and again, this is amplified right now in the relatively illiquid mid-August summer trading conditions.
Gotcha. Brian, appreciate you tackling this tough assignment here. There's not a whole lot of direction here. Probably pretty thin liquidity as well, but appreciate you joining us today.
My pleasure, Tim, as always. Thank you.
This has been your New York Forex Market Buzz with Brian Dolan of Forex.com. If you want to interact with Mr. Dolan, you can do so by clicking on this video or go to our website at www.forextvconnect.com. Leave some questions there, ask some questions for next time, respond to what you've heard here today. I'm Tim Kelly. Join us later this afternoon for PM Exchange right here on forextv.com.